Welcome to the Astech Loan Management System demo. This will be a brief overview of the loan system solution. We'll try and highlight some of the functionality and some of the capability of the system as I go through the demo, but obviously to get more information, contact us directly. But as you probably know, the solution is actually built within the Sage CRM framework. So the first thing we need to do is log into Sage CRM. Now, the solution is actually part of Sage CRM, so it looks and feels just like it, but it also means you have the advantages of using Sage CRM, such as the customizability, the extensibility, the workflow capabilities, and the security and access control capability as well. We'll highlight some of the others. So we can log into any particular screen we want to, obviously on a user basis. We've just set this user, Anthony, to log into his loans. So these are the loans assigned to me. We're taking advantage of the pipeline, so we can see the loans at various stages. So what we can do is use the workflow capability to progress the application workflow of the loan. So from origination to appraisal, approval, as the loan gets approved. You can do credit checks online on the loan. We can create documentation. And as it goes through that approval process, it can be workflowed, can be assigned to different users. We can use emailing, SMSing. We can contact the client along the way. And it can be tracked and monitored through this interface over here. So these are the loans assigned to me in their various stages of use. Okay. There's also a dashboard. So for management capability, let's quickly have a look at the dashboard before we draw into details. This is an example of just some simple dashboard loans. So this gives you the number of loans by branch, for example. This gives you the total loan book variation over time, and this gives you a sense of arrears over time. So just some examples of how how your dashboard could be used within CRM. So if we go back to our loan screen now, we can also see that on here we will not only have the principal amount which is approved, we also have the current loan balance on each loan. And because it's a CRM list, basic list, we can also add things like arrears on there if we want to, or customize this list as we need to. So let's drill into a particular loan, and I want to use one as an example. Let's take this one over here. And we go now to the account summary screen on this loan. And we can see some basic information like the loan number, the product that's being used, because you can configure the system in such a way that it uses different loan products. We'll talk about that in a minute. We can have a description for it. We can have payment cycles, what is the original requested amount on the loan application, what the loan actual amount is, what the period of the loan is, 12 months in this case. In this example, we've actually set up this account screen to show the total repayments and the total interest on the front screen. You could include more detailed custom information on the loan or not. Your customer is shown up here, and you can obviously click through to see the customer information from this point as well. If we go, here's more detailed information on the customer. His basic information, his date of birth, his ID numbers, spouse if relevant, gender, birth dates, etc., company name, employers, and we can obviously add fields to this if necessary, quite easily with CRM. And we can also see the total exposure to this account. So you can have one customer could potentially have multiple loans. So here's a list of all the loans on this customer. Okay, so let's go back to a loan. It's got a little bit more detailed information on it. So we'll see on this loan summary screen, again, the basic summary information, the loan amount, but the loan balance in total, what the current installment is on the loan, and what the arrears amount is. So you can see here it shows you the total repayments, total interest, and what's now due. Now due is typically the arrears plus the current installment, and then it shows you the aging on this loan going back. Okay. You've also got some other more detailed information like a GL company, so you can have multiple legal entities within the loan book used. You can segment your loan book in multiple different ways. Okay. We can also go and have a look at the detailed transactions on this loan quite easily. So if we go to the loan transaction screen, you'll see cash withdrawals, you'll see the interest that's accrued, you'll see a card fee raised. Now, you'll see that these are raised on the 10th of the month because in this particular sample system, the 10th is the cycle date, and the cycle date can be changed. You'll see there's also a payment that's gone through, and there's another cash withdrawal. Okay. Now, the transaction types that are used within the system are also configurable. So they will have different descriptions depending on the type of loans we're talking about, whether it's micro loans, property finance loans, whether it's revolving credit, etc. You can also record income and expenses for this particular account. So you can see things like a basic salary, deductions, net pay, rent, bond, and we can add to that list. We can have multiple cards, if necessary, linked to this account. We can have notes, free format notes on the account, basic details of communications, phone calls, meetings, emails, letters, etc. on the account. We also store all the documents on the loan. So quotation letters, loan agreements, letters of demand, or just simple communications between the client statements can all be stored on the loan so that they're always available for easy reference. Tracking keeps a history of the workflow process of the loan. So as it goes through the various steps of the application and approval and appraisal and vetting the loan, those stages will be recorded on the loan, and as those changes get made, it records when it happens, the date, and who did the action and what the account status was at the time. Also things like the loan amounts, the credit limit increases are tracked here as well, and the account status. Okay, the account contract shows a detailed forecast of the schedule of the loan. So based on the balance and the interest profile and the repayment profile, you'll see the schedule going forward. So it'll show you each repayment amount as well as opening and closing balance of the loan at each month. It'll show you the period that accrues each month, the interest that accrues during each period, and the interest rate that month. Now, I mentioned earlier that you can have multiple different products within the system. Each of those products can have its own definition of how the repayments are calculated, what the repayment profile looks like, and how what the interest profile looks like. And that can be fairly complex if required. So, for example, you could have one type of loan which is linked to prime for the entire duration of its life cycle, but you could also have a loan, a different type of product, or specific loans, in fact, not even loan products. A specific loan could have a base rate, but then an additional 1% interest for the first few months, or it could have a reduction in interest for the first few months, or you could change it to a fixed rate in between the loan period. So to give an example of that, the account interest period shows you that. And this example we just have for 600 months, which is 50 years basically in the case of a revolving credit. We have an interest rate linked to the max NCA rate. The max NCA rate is a global rate. And we can have multiple different types of global indexes. We can have prime rates, repo rates, max NCA. If we want to add an additional rate for a period, what we can do is we can so you can edit the interest profile by adding new records. What that means is that that interest during the period that it's valid will be added to whatever is there already. So for example, you could, let's say, add a refurbishment rate, which might be, let's say, 1 or 2%, so 1.5%, in addition to the current rate for a particular period. You can start at any point you like, and let's say at the beginning of May, and run it for, let's say, 7 months. And save that. Now you'll have two records there, and those two records will be aggregated together during the period that they're common. So that means that you've got a lot of flexibility as to how you set up the interest for a particular loan. Now you can do that either for an individual loan, or you can do that for a loan product, so that all new loans for that loan product take on that template and automatically have those properties. So as you saw for that loan, you can specify whether you can specify to add interest just for a particular period, or you can specify to link it to a global rate, or you can have just a fixed interest rate for a period, and you can then combine them. So you could have prime for a period, you could have prime less 2% for a period, you could then switch it to a repo rate or to a fixed rate, or any combination that the client requires. In a similar way, the installment calculation or the repayment calculation works in much the same way, where you have multiple records and each define the repayment for a particular period in mind. So, for example, you could have a grace period, which means that there's no repayment needed, grace period. You could have a PMT calculation, which is your simple monthly based payment calculation. You could have an interest only repayment or installment. You could have a capital only installment. You could have a fixed installment. You could also have a residual or a balloon payment by specifying a residual amount. And then you can dovetail them onto each other. So you could have gold seek, or you could have grace period for a while. You could have interest only for a while, and then you could have a normal PMT calculation with a residual amount at the end. So there's an endless number of permutations that you can build on the account repayment. In a similar way, the charges work. You can have one or more recurring charges or single charges on a loan. So you could specify, let's say, a typical recurring admin fee of 57 Rand per month on most loans, which is, I think, is the NCA maximum. Or you could have a card fee in the case of a revolving credit loan. You could have initiation fees. You could specify whatever specific fees are required. So, for example, the setup for that works much the same way. You select your fee from a transaction type, and these transaction types are customizable. You can create new transaction types, name them as you like, and you can then have the effect on the loan specified as well. You could specify insurance charge, for example, and you can also specify whether it's added to the installment or whether whether it's amortized over the life of the loan. Okay, and you can specify start and end date, whether it's how many times it occurs, the recurring, whether it's recurring charge or not, and the frequency, whether it's monthly, quarterly, biannually, etc. Obviously, how much it would be. So that takes you through the basic front-end screens of the loan. There's obviously a whole reporting subsection with your reporting options are report within Sage CRM. You could use Crystal Enterprise Reports. You could also use SQL Server, SQL reporting services, or any other third-party reporting tool you need, because it all lives within the same CRM database. Thank you very much for your attention. Thanks very much for listening to the demo. And there will be further demos in this series, going to maybe more on the processing side, the administration setup side of the system. But for more information, please contact us on support@astech, as-tech.co.za. You can also phone us on our landline, or drop me an email. Email will appear on the screen over here. For any more information, thanks very much for your attention.